So why don't we just start and ignore the subject for the moment and just ask just one or two opening questions. So the U.S. elections are pretty much decided. It appears that the House is going to go to the Democrats by 30-some seats or so. Senate will maybe be a little bit more Republican than before. So your former boss, what do you think he's going to say about this?
Which one?
Well, we can start with...
You said you wanted to have fun.
All right, well, let's say, how about Donald Trump?
I think Donald will take full credit for the pickup of seats in the Senate. Looks like the Senate could go 52-3-4, somewhere in that area, right. To mainstream Democrats, incumbents losing at a minimum. And I think Donald will point out that he campaigned in those states and campaigned in those states hard. He will say it is a complete ratification of his policies, and his policies are working.
Okay. And if you were there, would you advise him to say that?
Well, I would say my personal opinion is, look, you've got a election that gave you dual results, right? You've got a Senate that's going one direction. You've got a House that's going a different direction. And the makeup of the House right now is getting more and more interesting, much more diverse, many, many more women. Women voters came out and they voted for women, which is a very good thing. The suburban population came out and voted. So I think you've got a little bit more of a mixed message in there, but it does look to me in some respects that the economic issue did play into the election, and the fact that the U.S. economy is strong did play into the election.
Okay. Larry, the market's open in New York tomorrow morning. What's going to be the impact? Markets up or down?
Need a coin?
Yeah, I don't think the outcome is a big surprise. I think the markets, obviously we've had a pretty big setback. The market is reassessing itself. Last few days, the market is trying to restabilize. I think we'll still be part of that restabilizing process. Just to carry on what Gary said, though, I think the big narrative will be women. Women voted for women. We have a much more diverse House. I believe it's not just women voting, more millennials voting. And I do believe that is going to shape the elections in the next 2 years again and in many years before. Even in the elections where Republicans won, it was much, even like Ted Cruz, it was very narrow. And I do believe you're starting to see demographics playing into it. Mm-hmm. But I think the underlying thing that really shaped the election was the power of the economy. And generally when the economy is doing this well with 3.7% unemployment, I think it played out pretty well, except demographics are starting to play in, and the power of women and millennials is going to shape U.S. politics.
Hey, now, you talk to the federal bank, the central bank of the United States, the Federal Reserve, a lot, people there. Do you think that the president's comments about the central bank's positions on interest rates is influencing them or not?
No. I think they're on a path of raising rates in December. If anything, they have to prove independence, and so I think the president's narrative makes it more difficult. Right. And I believe they're on a path of raising rates. On the other hand, I do believe because of changes in our economy, changes of mortgage deduction and interest deduction with caps on deductibility, I do believe higher interest rates are going to have a more immediate impact on the economy. So I don't agree on the forward rate where people believe where the Federal Reserve will be in a year from now, because I think they're going to have to slowing down their pace.
Okay. Now, are the Canadians happy with the current administration of the United States? And how do you think...
Thrilled. Yeah.
How do you think your prime minister can get a better relationship with the president, or you think there's no way that can happen anytime soon?
Well, I'm not going to speak on behalf of government, but we're in this wonderful position as a pension fund of being totally arm's length from government. But I think...
That said...
Sorry?
that said, okay. But,
yeah.
But,
yeah. I mean, that said, it's the most important economy that Canada engages with, and from our own point of view, is where we have most of our money invested. So it's incredibly important, but Canada has to diversify its trading relationships away. It's made great efforts on doing that with Europe. It would be fantastic to see more progress in Asia. on its Asia trading relationships.
Okay, so we no longer have, well, NAFTA hasn't yet been approved by the Congress. It may or may not be, but let's assume it is at some point. How is the new USMCA, as it's called, going to be better for Canada than the existing NAFTA agreement, if at all?
Yeah, I mean, I think as it's marginally beneficial. The most important thing is it takes away uncertainty, because uncertainty has held people back from investing. It's held companies back from investing. It's meant, it's put a dampener on GDP growth in Canada, and it's made people unsure about where to put the dollars if you're building a new plant or something. So that, with that removed, then it will create more momentum in the corporate sector. So I think it's beneficial for Canada overall, just from that point of view.
And I should have asked, people may not be familiar, the Canadian Pension Plan Investment Board, which you're the CEO of, how much money do you manage on behalf of Canadian taxpayers?
$360 billion. So we're the national fund for everybody in Canada outside of Quebec, but we're purely an investment organization. We invest all over the world.
The United States has a pay-as-you-go system, more or less, called Social Security.
Yeah.
Why don't you have something as good as that?
Well, we sort of did.
What?
We sort of did. When the system, this is not the forum to start the history of pension, and there's a book about it, but we started, when the system was set up in the 1960s, it was basically pay-as-you-go. And
now you have a fully funded system.
Birth rates dropped, people kept living longer. One amazing statistic on demographics, because this is one of the things, as a long-term investor, one of the things we follow. Every year since the 1920s, Canadians have been living 3 months longer. And,
really?
And that hasn't, unlike in the US, it hasn't sort of tailed off. It's kept going. So basically, the system didn't work by the 90s. They had a crisis. They had the crisis in the 90s. They restructured it, and they created a system that is sustainable in the long term. And it's worked really well.
So when Canadians retire, they actually will get their pension.
They will get their pension. Yeah, definitely.
Okay. Yeah. In England right now, what about Brexit? What is going to happen there? We're tired of waiting. Can you finally resolve what you're doing? Hard Brexit, soft Brexit, just something. Tell us what you're doing.
Well, again, I can't speak for the government, but as an observer, I would say the problem is that the UK isn't negotiating with Europe, it's negotiating with itself. And the proposal may get through the cabinet, but I think the big question mark is, will the Prime Minister be able to get it through Parliament? And that's not so clear.
So some
what happens?
people say that a lot of men in the Parliament want her job, but they want her to get beat up, have a woman get beat up for pushing this through, and then the men will come and try to take her job. Do you think there's any truth to that?
I think as my old boss, Christine Lagarde, used to say, when things get really tough, they usually call in the women to clean up the mess.
Exactly.
And if there... And if there were a vote today, another vote,
Yes.
and why doesn't the Prime Minister say, let's have another vote? But if the Prime Minister doesn't want to say, if there were another vote, would it be the same 52-48, same way?
The polling is very close still. There is a little bit of evidence that as the nature of the deal has emerged to be quite unattractive, that some people have shifted, but I don't think it's clear what a second vote would look like. Having said that, if she can't get it through Parliament, she has two options. You either call another election or you have a second referendum, and that's going to be the crunch point.
Okay. So Gary, you were in Wall Street for a long time, and sometimes people say there are a lot of big egos there, but some people say there are a lot of big egos in Washington. How would you compare the egos in Wall Street to the egos in Washington? Where are they bigger?
David, this is the second interview I've done with you. You've asked me the same question twice.
Well, that's a good question.
Are you just making sure I'm consistent with my answer?
But other people haven't heard your answer.
Oh, okay. No comparison.
Which way?
Washington.
Oh, really?
Yeah. Well, I mean, Washington wins by all means and extents. There's much more of a system in Wall Street of having one's bluff called. And at the end of the day, you're either right or you're wrong. And your P&L, your profit and loss reflects it. Your market view reflects it. You get a transaction done and you don't get a transaction done. And you're held to that level of accountability. In Washington, if you get nothing done, you're running way above average.
Okay. So what was the biggest surprise to you? Was that it? When you left government, when you left Goldman, you were president of Goldman, A lot of power, you're a very powerful firm. When you went to Washington, what was the biggest surprise in serving in the U.S. government?
No, I think in many respects it was what I just said. You would assume that the organization of the U.S. government would come in every day. First of all, they don't come in most days. The days that they come in, you would assume that they come in trying to move legislation forward to proactively help the country get itself to a better place. And unfortunately, I think we keep moving farther and farther from that, and you see that even in today's election. We are a country that is very, very divergent on opinions of what is the right direction and how to get to the right direction, which leads to a place of no activity, and no activity being the right outcome.
Now, the tax cut bill that you largely engineered has produced...
That Larry picked on.
Okay, has maybe been responsible for the U.S. economic growth being so strong, but it said that the deficit will increase and debt will increase as a result. Are you comfortable that the increase in debt and deficit is worth the price that we're paying for this?
So look, this actually deserves a really long answer. I won't give you one because that would be unfair to the other panel.
I'd like to hear your answer, too.
So would I.
Larry, you've heard it. You just choose not to listen.
All right.
So the answer is something like this. Look, in the United States, prior to this administration, we had a corporate tax rate of 35%, and we taxed on a worldwide basis. Our competition, meaning all the countries we competed against, had a tax rate in the low 20s, 21, 22, and many of the countries we competed against had abilities to get into single-digit tax rates. You start at a huge competitive disadvantage in the United States as a business person, business creator, business formation, and the ability to hire people when you start at a huge competitive disadvantage didn't make sense. What our view was is we have to make the U.S. corporate tax rate competitive with the rest of the world to attract business back to the United States, attract earnings back to the United States, and attract jobs back to the United States. That was the basic core premise of what we had to do. The reason we did that was to drive the economy, to drive wages, to drive growth. The numbers behind that, and everything in the United States miraculously is done on a 10-year budgeting cycle. If you can drive GDP by 1% from whatever the baseline would have been, and this is a great government argument, right now we're 3.5. The projections before we got there where we were stuck in a muddled 2%, we were running right 1.7, 1.8, 1.9, so we're proving that we can drive more than 1%. If you drive GDP by 1%, you create $3 trillion of deficit reduction. Over the 10 years, you create 12 million jobs, and you create $10 trillion of extra revenue. So the answer is over a 10-year period, if you do that, you do pay for the tax cuts.
So Bismarck famously...
And that was a quick answer.
Bismarck famously said that people don't want to see two things being made. One was sausage, and the other was legislation. So you were in the middle of the tax legislation. How would you think that process would look if publicly exposed? Was it a complicated give and take and harder than getting a deal done?
People shouldn't watch it.
Okay.
You know, it's right. You know, the important lesson to learn in Washington as well is never let perfection get in the way of a piece of legislation. So to get a piece of legislation done in the United States, you make many compromises along the way. If you were to hold out for the right bill, the perfect bill, the bill that made the most sense, you would never get a piece of legislation done.
So Larry, you built, with the help of others, the single largest private sector money management firm in the world. You're managing now
Markets have gone down.
All right, between $6 and $7 trillion, which is a lot of money. And the firm is how many years old?
30.
30. So if somebody was watching and they wanted to build another $6 to $7 trillion firm and they wanted to follow your model, what is the secret? What are the one or two things you did that enabled you to come from nowhere to 6 or 7 trillion in 30 years in a few paragraphs?
Having good partners, having principles that you stand by for the entire length of your organization's life, and working for companies and clients, not against them. And They're all simple principles, but we've been standing by those, and I think it's paid off, and it continues to pay off today.
Okay. All right, so today, we've had a growth period in the United States of about 10 years, the second longest since, I think, World War II. People keep saying there's going to be a recession at some point because inevitably there is one that always arises. Do you see any recession in the near term, next year, year and a half, 2 years? What if anything, worries you about the economy?
First, I want what Gary said to be true. I mean, and that it becomes a reality, that we do have an extra 1% growth over the next 10 years. Because if we don't have that, we are going into a recession. And that is, I would say that's the debate that's going on now in the economy. Are we, we've had a 10-year bull market. Bull markets generally don't last 10 years. And so we're at this point now. And we are also seeing growth shortages in other parts of the world now, and the real star in the world remains to be the United States on the back of the tax cuts. Our government has already announced that 2019's deficits are going to be 1.3 trillion. So already they're saying that math is not working out. And I believe the biggest crisis could be, and I don't want it to be the outcome. The outcome I want is that we have extended 3% growth. But if that outcome is not the case, and I do believe the $1.3 trillion deficit is still based on a 3% economy. So if the economy does slip because the world's slipping or because there's trade imbalances or trade problems and we see less growth, I mean, the problem is we are living with a deficit that is very large. We are fighting with our creditors right now worldwide. Generally, when you fight with your banker, it's not a good outcome. I wouldn't recommend you fight with your lenders and we're fighting with our lenders. 40% of the U.S. deficit is funded by external factors. No other country has that. And I do believe now with deficits of $1.3 trillion, we are going to probably see, and this is where I somewhat disagree with the president attacking the Fed, because I do believe it's more of a supply problem that we are going to have more and more debt because of the deficits, and because of the deficits, we are, the investor's going to demand a bigger premium, and we have greater risk for higher rates that will not allow the equity markets to flourish, and that could be the real issue related to everything, where we have interest rates becoming too high to sustain the economy with its growth rates.
When I was in the government, we got inflation to about 18 or 19%, which is a way to solving your debt problem. Would you recommend that we inflate a little bit more?
I don't think that's going to work now, and I don't think our creditors, at that time we didn't have that much dependency on foreign creditors too. So I think this is going to be the big issue, and this is going to be the real issue going forward with government. I mean, one of the big projects that the Trump administration talked about that we haven't accomplished yet is our infrastructure problem. $2 trillion of deferred maintenance, building up worse and worse and worse. And so there are some great needs in society right now. And if indeed we do have that $1.3 trillion deficit, and if the economy isn't growing at 3%, we're going to have a far bigger crisis than in the coming years. And then the fear about the ending of this big bull market is probably going to be a reality. And you would agree with that,
Mark,
right?
Yeah. Mark, you have, as you said, $330 billion to more or less invest.
More or less, yep.
So what kind of rate of return are you looking for on that $330 billion? Overall, what kind of rate of return?
As high as possible.
Well, but give us a number.
I mean, basically, so that's the glib answer. And let me, maybe I'll add
Okay.
on to some of the comments here as well. So our mandate, the genius of the way this was set up was two things. One, it was put at arm's length from government. So it is entirely arm's length, and it's an independent board and management team that decide how to run the money. And it was given a really simple mandate, which is maximize returns without undue risk of loss. So we're trying to maximize returns of what we think as a board, independent board and a management team is the appropriate level to run this. And we're measured over 75 years. So the chief actuary comes in every 3 years, measures, are we sustainable over 75 years? And when you look at that, things like the election result doesn't really matter that much. You're looking at really long-term trends on what's really going to influence returns over the long term. So it's things like, technology disruption. It's things like the demographic shifts around the world. It's things like the movement of economic activity to emerging markets. It's climate change as well. Those four things. And then I'd say things that could really disrupt things, even in the shorter term here, and exacerbate the next downturn is the rise of populism. Was Peter Thiel right, several years ago when he called peak globalization being 2007, and this is going to be a secular trend and it's not going to reverse. We're going to see more and more rise of populism, which will inflame all the problems in the downturn next time around. And then the one that Hank Paulson was talking about this morning, though, probably my number one worry, which is the tension, the China-US tension, which has the potential to really rise to a very dangerous level over time.
Of the money you have now, the $330 billion, what percentage is invested in the United States, in Asia, emerging markets, Europe, Canada?
So today, our biggest market is the US because it is the biggest economy and the biggest market and biggest available opportunities. So about 40% is in the US. In Asia, we're about 25% and rising as economic momentum and market availability rises here. And we're able to access a lot of investment in China because we can invest onshore. We invest in lots of different ways in China. We don't need to hug an international index and wait for MSCI or FTSE to increase the proportion. So China is a big market for us.
So if somebody said, I'm watching you now and I'd like a good investment idea, somebody in the audience said, give me a good investment idea that they could employ investing using the intelligence you have and all the information you have, what would you recommend as a good investment idea for somebody?
Plastics.
Plastics. How do you come up with that one? Anyway, so I think one of the things we're doing, as long as my last two worries don't come true, is we continue to push into and rebalance into emerging markets. So we've seen a big sell-off in emerging markets. Long term, we have said by 2025, we will have up to a third of our fund in emerging markets. And we're not going to do little small markets. We're focused on principally three major markets, China, India, Brazil. And if you look at 2025, current projections say 47% of global GDP will be emerging markets. It'll go over 50% sometime before 2030. So now we don't hug GDP, but again, that's probably the direction we're going.
Okay.
If you look at all the dislocation that's happening right now, all the people are very concerned about emerging markets and what the tensions are that are going on there. So you can find a lot of interesting opportunities.
Without doubt, the best thing to do is put your money in private equity, right?
Of course.
Right, of course. Okay.
And public markets.
Right. Let me ask you a question, a very serious question about you were the deputy of the Central Bank of England. And there aren't that many women in European finance who rise up to that level. In the United States, we've had Janet Yellen serve as chairman of the Federal Reserve Board, and the head of the IMF, who's here, Christine Lagarde, has risen to that position. But do you find that in rising up in the central bank and other places that you found a lot of discrimination because you're a woman? And do you still feel the discrimination?
I think discrimination diminishes massively when you have power. And so the more senior you get, the less you experience. I think most women would say that when it's hardest is when you're young and junior and have very little power. So I think the answer is to get more women into power.
Okay. All right. All right. So in the central bank in England now, it's run by a Canadian. So how can it be the case that the people in England say we should have a Canadian run our central bank? Why are they? I mean, Americans wouldn't want to have somebody from another country probably run their central bank. Why is that not a problem?
Well, I think it's a little bit of a legacy of the UK's history that it had people.
He's done a very good job, I should say. But
Same Queen.
Same Queen. Actually, funnily enough, you say that. When Mark Carney was appointed, the Queen is the Queen of Canada, and he had to be removed from his position and approved by the Queen. and then she had to approve his appointment to the Bank of England. So as far as she was concerned, it was just an internal transfer, really.
The Prime Minister gets to meet. The Prime Minister gets to meet once a week with the Queen. The head of the central bank, does he ever get to meet with the Queen after being approved?
I
Or?
don't think he has a regular appointment, but I think he might encounter her on occasion at events.
Okay. And is it a problem that it used to be the sterling was the reserve currency of the world,
Yeah.
and now it's, let's say, not. Does sterling have any view of? Do you have any view that sterling can ever come back and be a reserve currency, or that those days are over?
You know, I think it will, I think that those days are over. I think becoming a reserve currency takes a very long time, and I think it's highly relevant in the current debate about what's happening to the dollar, what's happening with the RMB. There's quite a nice piece, a historian has looked at how long it took the dollar to displace sterling. And it took about 100 years for the dollar to rise to preeminence. And the key factor was institutions. Does your country have institutions that international investors will perceive as credible in the long term? And I think that's the biggest question today of which currency will dominate the global market.
And do people in England ever say if they'd managed the Revolutionary War differently that they could have the United States? They never think about that anymore, right?
Yeah, I think that too has passed.
So, Gary, many economists say that a budget deficit is a problem, but not that many economists say a trade deficit is that big a problem. Yet the President of the United States seems very intent on fixing trade deficits as he sees them. Can you give us any insights on why he's so concerned about trade deficits?
No.
All right?
He found one economist on Amazon who thinks trade deficits matter, and he listens to him.
Okay, well, let me go to the next question. Then, in terms of the economic...
I had hair when I started this job, too.
Can you explain to people the economic decision-making process in the U.S. government? I mean, how does it really work? Is it done by memos? Is it done by oral briefings? Last person in? What's the process by which the process is made? Your predecessor, Bob Rubin, started the process of the Economic Council in the White House, and it's evolved since then. But now that you ran it, how does it work? Is it mostly memos? Is it oral briefings? Is it catch as catch can? Or a lot of those things?
I just was going to let you keep asking.
Okay. So
you want to ask it a third time? Go ahead, ask it a third.
What's the basic? If that's suppose somebody wants to make a decision, get the president to do something. What's the best way? Is it to write a short memo? Is it a brief?
The best way is to call the president.
Call him directly.
Yeah, just call the president.
Is it hard to get him on the phone or not that?
No, not hard at all.
Really? Okay. And right now, the trade skirmishes that we have with China, do you think that there is a resolution in the offing after the election, that something will get resolved?
I don't think there's a instant cure for the trade issue. I really don't. I wish that I could sit here and say, after the midterm elections, the White House and the administration understand they've got to solve trade issues. I think China would like to solve the trade issue. It really comes down to I would say there's two main topics. Topic number one, for some reason, is the side of the trade deficit. The actual trade deficit with China is about $300 billion net, and the president seems to think that number is way too large. I tend to differ with that. I tend to say that's $300 billion worth of goods that we're buying cheaper than we could produce ourselves, because if we could produce them cheaper, we would be doing that. So there's that issue. And then there is a more interesting issue that I think is more pertinent, which is the open access to Chinese markets and the enforcement of intellectual property, forced technology transfer, where the Chinese have historically not allowed U.S. companies into China and have not paid for much of the technology they've taken from the U.S. I think that is the bigger issue. Okay. I think the Chinese would solve the first issue and buy a lot more natural LNG, natural gas from us, and more agricultural products and bring down the trade deficit, but it doesn't really solve the core issue, which is paying for intellectual property and respecting copyrights infringements.
Larry, you talk to central bankers every day. What is the main concern that central bankers you're talking to have about the global economy now?
I think they're worried about a trade explosion, a trade impact between the U.S. and China. They are seeing evidence of slowdowns in parts of the economy. They're worried about Italy right now in terms of what Italy can do related to Europe. But look, the reality is, I think central bankers are playing a smaller role in what we do. The reality is what we are spending more time on, focusing on more of the political issues, populism, how that's playing out. I do believe, like the issues we had to deal with related to Saudi Arabia, where public companies had to make a decision before governments. And so I actually believe investors are much more focused on things away from central banks than ever before. I do believe the role of millennials as investors are playing a bigger role. And I do believe the whole issue about ESG and how we are performing as companies, whether companies have purpose or not, and are they showing that purpose every day, is really what I believe is going to be the transformational change. And whether central banks are tightening or easing, or central banks have these issues, I think that is so secondary to the narrative today.
Would the world be better off if we had more than one reserve currency, do you think?
I think we're going to move there over time. And, many people believe some type of cryptocurrency is going to be that. I tend to say that's not going to be the answer.
No.
But I do believe the answer will be over time that there is going to be another reserve currency. It appears at this moment the RMB is going to play a larger role. It's certainly playing a larger role in Southeastern trade, Southeastern Asia trade, playing a bigger role. I have heard from many Europeans who are now caught in this whole problem related to U.S. sanctions related to Iran. Almost to a CEO, they're all bemoaning that they have to follow the U.S. because the role of U.S. banks, and we are the store of wealth, and I do believe there's greater desire, and this is probably the big thing for me, there's more desire by more leaders of more companies and countries to find a longer-term solution beyond the dollar. That still may be a 20-year outcome, but I heard from some business leaders that they would like that outcome to be resolved in 5 years. I don't think it will happen in 5 years, but the notion that I heard, and I heard it uniformly, that people are looking for a different reserve currency is quite alarming, and I don't think that is understood enough today.
Okay. Mark, if people who haven't been to Canada don't know it as well as obviously you do, what would you like people to know about Canada and its economy? What's the most important thing?
It's really interesting sitting on this panel. You can generally see a trend as it's coming towards you, but this one, it keeps going in weird directions. So. All right. But, I mean, on the trend on Canada, I mean, I think, I say, Canada's a beacon of common sense in the world. And it's, I think, it's a well-run, I think, from my perspective, very sustainable system in many different ways.
Well, you were at Goldman for many years. You lived in Asia for quite some time.
Yeah,
20 years.
I've only been in Canada 2.5 years, so
okay,
I'm not going to give you the whole history.
All right, so any regrets about leaving the private sector and going into working for a government pension fund?
Yeah, well, it's, I say we're a funny thing in that we're sort of arm's length from government, so I don't report to government, I report to an independent board. But I think, one of the things I want to do in life, I started out in doing medicine, actually. I was a doctor originally, and then I went into Goldman out of curiosity, I went into finance, and then I went to Asia out of curiosity, and I ended up building most of my career. I spent 23 years in Asia and Hong Kong and China. So this was another twist and turn, but I always wanted to do something that combined together the knowledge I got from finance with doing something worthwhile in the world.
And you're a medical doctor as well?
In this way, you're doing something worthwhile for 20 million people. Sorry?
Okay, you're a medical doctor.
I'm a medical doctor originally, yeah.
Okay, so the best way to stay healthy is?
Your line used to be do private equity.
Okay, all right.
God smiles well on people who do private equity.
Healthy for the investors. Okay, so a final question. Our time is up. Final question. Is England going to have a Brexit eventually? And what do you think the impact is going to be on England and Europe? In one paragraph or so.
I think the most likely near-term outcome is delay. That not much will feel like it has changed. There may be something that is signed. There may not be. There might be a longer transition. But I think on the ground, very little will change in the near term. And then after that, who knows?
Okay, so...
I mean, I think well, if I may, I think one longer-term scenario is that eventually Europe will have to probably develop a model of concentric circles. The Eurozone countries will have to eventually resolve the incomplete parts of the institutional structure of the Eurozone in terms of fiscal transfers, having some mechanisms for dealing with shocks. And that will mean that many countries that are in the next rim, the Scandinavians and others, who might not want to join the euro, will be in another concentric circle. And you could imagine a scenario in which the UK became part of one of those concentric circles, because the economic logic of being closely integrated with your largest market is so compelling.
Right. So you've all flown a long way to get here. You all agree that it was worth coming. Yes?
Of course, David.
Yes, yes,
Absolutely.
yes. And is this the best conference you've ever been to? Yes? Say yes. The best panel you've been on, right?
Panel ever.
Definitely.
Okay, we're done. Thank you.